In 1637, a single tulip bulb sold for more than a house. Not a bouquet, not a field, one bulb. This is the story of the world's first recorded financial bubble, and how an entire nation lost its mind over a flower. The Netherlands in the early 1600s was the wealthiest nation on earth. The Dutch East India Company had made Amsterdam the trading capital of the world. Money was flowing. And into this fertile soil, the tulip arrived, imported from the Ottoman Empire, exotic, rare, and utterly captivating. Tulips were unlike anything Europeans had seen. Their vivid, flame-like patterns, caused unknowingly by a virus, made each bulb one of a kind. Wealthy merchants began displaying them as status symbols. The rarer the bloom, the higher the price. And as prices rose, more people wanted in. By the mid-1630s, tulip trading had taken on a life of its own. A futures market emerged. People were buying and selling bulbs that hadn't even been planted yet. Contracts, promises, paper. Ordinary tradesmen, weavers, even chimney sweeps began trading tulips, mortgaging their homes to buy in. The mania had spread to every level of society. At its peak, a single Semper Augustus bulb, the most prized variety, sold for 10,000 guilders. That's roughly the price of a luxury Amsterdam canal house. People had stopped seeing flowers. They saw investments. They saw wealth. They saw a market that could only go up. Then, in February 1637, it stopped. At a routine bulb auction in Haarlem, buyers simply didn't show up. Word spread overnight. Prices collapsed. Some bulbs lost 99% of their value within days. The contracts were worthless, the loans unpayable. Fortunes evaporated. The Dutch government refused to honor the futures contracts, leaving traders holding worthless paper. While the economic damage was less catastrophic than legend suggests, the psychological damage was permanent. Tulip mania became the cautionary tale of irrational exuberance, a lesson not just about flowers, but about human nature, herd behavior, and the danger of price detached from value. Almost 4 centuries later, tulip mania echoes in every bubble since, from the South Sea Company to .com stocks to crypto. The details change, the human behavior doesn't. When everyone believes an asset can only go up, and when price loses touch with underlying value, history has a habit of correcting itself. The question isn't whether bubbles happen, it's whether you'll recognize the next one.